if there is a dip, we are buying. We have really skyrocketed high, and there is still a really strong buy, even though there was really a big high over the last 2 days. Alright, so hello everyone and welcome to another episode of Investing with Marie, and this time we are going to catch all of the stocks and the financial situation of the month of February. My name is Marie Zemecikova and I am the founder and CEO of Marie Olivi Ltd, leadership transformational company that helps entrepreneurs, leaders, founders and professionals to rewire their mindset to create personal brand and wealth strategy in order to build influence and to create business with legacy-driven purpose. Currently, if you are investing for 2 to 3 months on the market, you might be quite spoiled because all of the stocks are usually going up. And this is about the sentiment on the market, and you could end up right now in the negative numbers, which is totally normal because on the financial market we are speaking about the cycles. So they are up and downs, and if you are fearing the current situation, it means that you didn't consider rightly the risks. Usually we are investing what we can save so that we can actually multiply our excess of wealth. However, if you are investing the money which you need then in the future, and currently you are in the situation that your investing is in the red numbers and you fear that you will lose all of your savings, then you didn't consider rightly your risk management and risk strategy. Therefore, if you are fearing the current situation, definitely I would recommend you to revisit your risk strategy and maybe start to invest a bit less, or on the other hand, catch the current sentiment and use it as an opportunity. Because according to the Moody's, we are currently in the negative sentiment. It means that if you are looking at the overview of all of the stocks, mainly we are looking at the technology like Nasdaq and others, then we are seeing red negative numbers. This can cause two different strategies of the investors, and especially those who are long-term investors like me. So either you are going to invest this month for a military equipment, for weaponry, for army, etc. Or the second one is about technology, because there is currently a big dip, which of course means that if there is a dip, we are buying. However, a lot of investors, especially those who are currently investing for 2 to 3 years, they are fearing the current situation, so there might be a bit of hesitancy. Therefore, the market is here for an opportunity, and it's according to you what you will choose, either if you are going for the armory or the second if you are going to catch the dip. This month I invested in 6 stocks in total, and I did a combination of these both. So I am in majority catching things in the dip, and 2 stocks are into the military. I'm already a bit late. I didn't catch it around the 20th of February because there were some lunches around our company, so I couldn't really focus on the stock market. So I am a bit also in negative sentiment in order to actually invest in the armory. However, I also went a bit over the budget than usual because I see really big opportunity currently on the market. So I invested 2,500 euros, and we will now take a look at all of them step by step with why did I choose them. So the first one is Microsoft. I already have Microsoft in my portfolio, mainly 0.7 of the stock, so just a proportion, just a small share, and I am adding one full stock this month because Microsoft is currently in a really strong buy because of this big dip, and I really believe that Microsoft is an innovative company that is going with the flow of the innovation, and therefore I want to use this opportunity of big dip in technology. And also, don't actually forget that technology will always be here. Whatever will happen in our world, technology will be here. AI is not going anywhere. Robotics is not going anywhere. So really, this dip is an opportunity to rather buy than step back. So I'm buying one full stock of Microsoft. Microsoft is very well known because it's in SAP, is also in Nasdaq and in Fortune 500. So there is for me actually no reason why I should step back. There might be only step back that I want to wait for a bit if there will be a deeper dip, but then I can just make a bigger share there during the next dip. So we will see. But right now I decided for one full stock of Microsoft. Then I was also looking at the Dell, which is also hardware and also software solution. They have over 150,000 employees, so they are really big company. And there I am going for two full stocks because they are currently at 91 USD per one stock. So I'm buying two shares and really looking forward for this because this looks really promising as there was really a big dip and Dell is really well known for its hardware and software solutions. Then of course Nvidia. So there I am looking for the three stocks. So it's an American company. I think that everybody knows Nvidia. There is also strong buy. Again, if you want to wait for maybe like deeper dip, you can wait a bit. If you want to use this opportunity, then it depends up to you. I decided to go for the three stocks because currently one Nvidia stock is for 112 USD. Then we have a bit of perk. So my really favorite one of this month of February, it's a bit different than from others that I chose out of six. So I have two armory companies and I have a three technological, and this one is a bit of special because there was not really a strong buy from the different researchers on the market and from the people, from investors, because it might go still also lower, but I saw a really great opportunity, and mainly because of the published report of quarter 4 2024, where actually we could see that the revenue of the company rose by 42%. So I already was watching this company for a longer time, and also there was very interesting that they had 24% more sales than was estimated. And this stock is AMD, so Advanced Micro Devices. They have a really high performance computing and they are specializing in innovation and also advanced technologies. But usually in the technical space, they are seen as usually number two. And number two in competing with Intel and also NVIDIA. So always they are seen as the second one in the processors, so that Intel is better than AMD, and then in terms of the computing, that the AMD is the second under the NVIDIA. So, however, when we look at this report and we compare the quality and the prices, AMD is a really good choice to go for, taking into consideration their report of the quarter 4, as well as the price and the capacity of the processor. And mainly here I'm speaking in comparison from the technological perspective that AMD has bigger capacity than Intel, and therefore I see really big opportunity because the stocks just went down by 10% for AMD. So I decided to go for three stocks here, and each 100 USD per one share. So this is my perk, which I'm really like. If you want to decide what to go for from these six stocks that I just mentioned, I would really go for AMD. And then we have the armory here. So here I chose two, Leonardo and Rheinmetall. I hope that I pronounced it well. Here I told you I didn't catch really the down when we went up since the 20th of February. Currently I am recording this, it's 9th of March. So within like 10 days, like it skyrocketed, and it's really impressive. But taking into consideration the longer period and what is the current sentiment, not only on the market, but also what are the decisions, political decisions currently made in Europe, in US, etc., and where the situation is heading. And Europe is becoming more independent from the US and want to contribute more to NATO and to Ukraine. Then this is very much still good opportunity because it's really at the beginning. So I decided to go for the 5 shares of Leonardo, which is currently at 44 USD per 1 share. And it's an Italian company, so we are still staying in Europe. Currently, we really want to invest in Europe because Europe decided to increase the spendings when it comes to the military equipment. And Leonardo is focusing mainly on design, research, and produce of helicopters. So here we have really something interesting, especially when it comes to the combat transport and also solutions. So there is a really strong buy. It's still in the downward, the 44 USD per share is still reasonable. And then we have Rheinmetall. This is the main reason why I decided to increase the budget for this month. And it's because it's like really skyrocketed high. It's a German company. Currently, 1 share is for 1,121 USD per 1 share. And they are focusing on 2 different divisions. So they have automotive, but also weapons and ammunition. And they have over 24K employees, and there is still a really strong buy, even though the shares are really so high, and there was really a big high over the last 2 days. I really regret that I didn't see and I didn't analyze the stock market during these past 10 days, because this could be really an interesting investment. So these are my 6 stocks for February. Definitely let me know in the comments below what you want me to discuss next time. If you want me to discuss the strategy, what brokers I'm using, and how do I, for example, perceive investing from the mindset perspective. Anything what might be on your mind while you were watching this episode, let me know in the comment, and we will do our best with my team to bring it to you. And I will see you next time. Don't forget to subscribe, to hit the notification button so you receive other high profile wealth videos next time. I'm Marie, the CEO and founder of Marie Olivier Ltd, and see you in the next investing episode. Bye.